Good morning, Jags. This is Fahad. Today is Wednesday, September 9th. Let's get started. This is fifth episode, episode 5 of the series we have been running in Jaguar Media called Chinese Tech Demystified. And in this particular case, we will be discussing the stock called Bilibili, symbol BILI. And once again, for all of these equity investments ideas in the Asian markets, we have Chronicle with us to explore the idea and tell us all about it. Hi, Chronicle. How are you?
Doing all right myself. How are you?
I'm doing great. Thank you. Now, before I get started with this presentation, I do want to point out to all the viewers over here that as you're going through the fundamental bull case that is going to be presented here in a bunch of slides, I want to quickly touch upon the two other parts of how we evaluate an opportunity, which is the technical piece as well as the option market. I think it's important to keep that in mind. From a technical standpoint, Bilibili chart has recently pulled back with the market currently resting right around $45 per share. And this channel has been intact since the beginning of the year, well before the COVID actually went into the headlines. A very powerful trend of higher highs and higher lows. And we are right at support here, the lower end of the channel. If it were to take another leg higher from here, easily, I think, in my opinion, it goes from 45 to 55. So that's the technical picture to keep in mind. And then on the option side, we have been seeing according to the Jaguar scans, significant amount of upside call accumulation for several weeks in Bilibili, several months, I should say. So this picture that you see in front of you is the full snapshot of all the option activity that Jaguar Scan has picked up since middle of April. And we have an 86% bullish bias with $4.3 million worth of call premium accumulated versus 675,000 put premium. So the option market has been pretty hot. So the chart is at support and the option market has been pretty hot. Now, with that said, let's get started with the presentation. Tell me about it, Chronicle.
Yeah, so moving to the next slide. A lot of people like to call Bilibili China's YouTube because they're both video sharing and live streaming platforms, and they're also both broadcasters of esports. But frankly, that's where most of the similarities end. If we dig deeper, we will find that Bilibili still has an emphasis on animation, comics, and games, or ACG in short, even if it has branched out to other categories over the years. And the platform caters almost exclusively to the under 30s and Generation Z demographic, while almost completely ignoring older audiences, whereas YouTube tries to cater to everybody and every demographic. So that's a major difference. Another thing is that Bilibili requires people to achieve a 60% passing grade on a 100-question quiz on ACG content, as well as general knowledge and pop culture, in order to qualify as a content uploader and full user. This acts as sort of a quality filter. YouTube doesn't have this. I mean, YouTube basically lets almost any Tom, Dick, and Harry upload videos, regardless if those videos are awesome or garbage. And the other major difference is that Bilibili is also a major national distributor of mobile games. In fact, this makes up more than half of their revenue thanks to a game called Fate Grand Order. And if you were to read pages 1 to 3 of the attached note, we could even make the argument that without Fate Grand Order, there wouldn't have been a US IPO, and there wouldn't have been backing from Alibaba and Tencent. So that was sort of like a stroke of good fortune for them. And the last major difference is that Bilibili doesn't make as much revenue from ads compared to YouTube. Advertising is only about 12% of Bilibili's revenue.
Interesting that you pointed out the relationship the company has with the two monsters in China, Alibaba and Tencent. As regarding Alibaba, Alibaba bought in an 8% stake in Bilibili back in 2019. And in exchange for that, Alibaba opened the doors of Taobao Mall to sell Bilibili related items. And it looks like that, according to most recent press releases, within the first 12 months of this partnership, Bilibili sold 100 million new items. more than 100 million new items on Alibaba's Taobao Mall. So naturally, that partnership relationship went out was pretty good for both companies. And the company Alibaba still owns the 8%. On the other hand, Tencent, which surprisingly is because it's a direct competitor in so many different ways with Alibaba, Tencent owns a 13% stake roughly in Bilibili. And I'm not exactly sure what their plan is with that particular stake, or is it more of a passive investment at this particular point? But Tencent being so big itself in live streaming and gaming, particularly, maybe there's something here also cooking. Any few quick thoughts on that?
I think Tencent is after their live streaming platform because Bilibili has grown really quickly, especially in the mobile game live streaming space. So we talked about Huya and Douyu in the past with their cornering of the desktop live streaming market. Bilibili is going after the more of the mobile games market. So live streaming, people live streaming themselves playing mobile games.
Got it. Um, Prior to its IPO, Bilibili wasn't interested in growth at all. That's a very interesting headline. What do you mean by that exactly?
Yeah, so this part is important if we're trying to understand the bull case for Bilibili. If we were to go back several years when Bilibili was still a private company, back then the website and slogan weren't very professional. And as a fun fact, their theme color was pink rather than the blue that we see today. And they just weren't that interested in growth and maximizing revenue. Like they resisted inserting ads into their videos. They kept their 100 question entrance exam very difficult because the emphasis back then was on maintaining exclusivity and keeping the platform as a sort of safe haven for the dedicated hardcore ACG crowd. So this prompted a lot of people to label the company as being too Buddhist in its operation. And at one point, the CEO even said basically that he didn't want to become more business minded, even if it meant that the company had to go bankrupt. But let's go to the long-standing bull case on the next slide. So after the IPO, when the company went public, Bilibili had to sort of sell its soul to the devil and forego a lot of that exclusivity in the name of growth. So what have they done the last couple of years? First off, the company made their entrance exam easier and added some common knowledge and cultural questions into the mix. I can tell you it's still not easy, if you don't know your ACG and pop culture stuff, but it's definitely easier than it used to be. And almost immediately, this resulted in monthly active user growth accelerating 70% year over year and paying full members reaching a record 13.4 million, or up 134% year over year. So making the exam easier had a great impact. Next thing is that Bilibili moved, as we talked just a while ago, to diversify into game live streaming, particularly into mobile games, as well as esports. So while Huya and Douyu are mostly into hardcore desktop gaming, Bilibili, as I've mentioned, has carved out a nice corner in mobile game live streaming. And with regards to esports, Bilibili's biggest wins to date were obtaining the 3-year nationwide media rights for League of Legends, as well as signing a 3-year partnership with Riot Games to broadcast the biggest League of Legends events. And while that was going on, the platform also expanded its list of video and live streaming categories to include fashion, documentaries, culture, school subjects, and lifestyle videos. So no longer just ACG. And on top of that, Bilibili organized lots of live events and viral campaigns to basically make people aware that all these changes are now taking place and the platform is becoming less exclusive. So naturally, all these changes have angered a lot of Bilibili's existing users, sort of like how if one of those, highly exclusive gentlemen's clubs were to suddenly decide to permanently open its doors to the general public, of course you're going to get some complaints. But I think as long as Bilibili's new incoming users continue to vastly outnumber the people who are complaining, I think management and Wall Street isn't going to care.
The important thing is that they're diversifying into many other parts, and most importantly, they're going after hot markets. They're going after spots where they know that they can make a lasting impact where penetrations are low, and they're not dependent on a single particular community of audience on their platform, and as a result they're able to grow, and the numbers prove that. Moving on to your next slide, this is where we see those. I'm looking at this slide as well as on my other screen. I'm also looking at the write-up that will be attached with this presentation and available on Jaguar Media website. The last quarter company posted monthly active users reached 172 million, which was up 70% year over year. And in terms of full paying members, they reached a record 13.4 million, which was up 134% year over year. And if you look at it on in terms of the daily views, reached 1.2 billion, up 97% year over year. And it just goes down the list. Whether you look at any metric in this company, it was an absolute blowout quarter. And so, and there's many factors that you've already discussed. One being, the company has basically championed these large relationships, including 3-year nationwide media rights for the League of Legends, which World Championship, which in short form is called LOL, League of Legends, that is, as well as the company signed an announcement of a 3-year partnership with Riot Games for live broadcasting of major LOL esports events globally. Riot Games and Microsoft are the ones that are major partners in League of Legends. And so these are the things that are starting to have a significant amount of impact. And it's appearing in all of these user metrics being so strong. Now, with this said, while staying on this slide, I do want you to connect me dots for this one deal that the company signed, which is called Princess Connect. And folks, just to kind of give you the background, here's the full write-up on this stock that will be also attached to the actual presentation. It will be available on Jaguar Media website. Princess Connect. This is a new mobile game that is supposedly extremely popular in Japan. And so they went to Japan, they bought the rights for it for the Chinese market. And judging from these conference call comments that the CEO made, it looks like that this game had huge increase in pre-registrations or record pre-registrations. Tell me about it exactly, what your thoughts are on this one, and whether this could be a potential short-term major catalyst for the next couple of quarters.
Sure. So to understand just how important this Princess Connect is, first off, it's important to note what drives most of Bilibili's revenue isn't the video sharing platform itself. Like if you read pages 4 to 6 of this attached note, you'll see that mobile games represent more than half of sales, and live streaming makes up about another 25%. So these two are actually the biggest drivers. Now, coming back to Princess Connect, the company launched this game, as Fahad just mentioned, and it saw a record 6.5 million pre-registrations, and newly added users for this game also achieved a record high number. And management expects the life cycle for this game to last at least a couple years. So remember how in one of the earlier slides I said that Fate Grand Order represents a huge chunk of gaming revenue? Princess Connect is seeing much higher registrations and new users than Fate Grand Order itself saw during its release. So that's one of the key points in terms of what to expect in the next 2 quarters. The other key point is that management is expecting to report record top line as well and monthly active users in the next quarter, because if you read the write-up, August was a full month of summer vacation. And second of all, the second half of this year tends to be stuffed with lots of online festivals and events. And Bilibili also tends to have their own events towards the fourth quarter. So that's the other important point to keep in mind with regards to numbers for the next couple quarters.
The only negative fundamentally on this discussion that, and you and I talked about this off the record, was that if we're going to have one dark side of this to at least bring up for discussion to let the audience be aware of, at least, is the company pays a significant amount of its revenues in terms of revenue sharing to the content makers, to the content producers. As much as 39% of the total revenues is paid out that they generate from live streaming, which is the biggest source of their revenue growth. And that number, 39% of total revenues, is 1.25 times the revenues that its competitors pay, like Huya or Douyu. Um, this has not been a problem for investors, as we can tell from the strong trends in the chart. But do you see this thing coming down over time at least, or is this something that's just going to be the case with Bilibili for a long period of time?
Right. So are the net losses a concern? I guess it is worrying to see net losses go from 184 million renminbi in 2017 all the way to 1.3 billion last year. And
Yeah.
those losses are expected to increase again this year. So why are they losing so much money? The short answer is that the company's two biggest expenses, which are revenue sharing and marketing. So the revenue sharing, if you recall our past episode on Huya and Douyu, these companies provide their content creators with a significant cut of their revenues. In Bilibili's case, they're paying out 39% of their total revenue, which, if you break it down, it implies 1.25 times their revenue from live streaming segment, which is insane considering Huya and Douyu are only sharing about 0.5 times. So Bilibili is being extremely aggressive here in trying to grow its mobile game live streaming platform. And this is the main reason for the growing losses. And to answer your question, yes, we should expect this trend of growing losses to continue. But as is the case with many growth companies, I suspect the market will continue to prioritize top line and user growth as the main drivers for upside in the stock. And as long as those two things continue to show fast growth, the path of least resistance for the stock should remain higher, I think. And I'd be a buyer on pullbacks.
Yeah, and I think that's exactly is the case in the US too, with the similar counterparts in social media companies, where a lot of the times when we look at the US tech companies, online companies, they investors are willing to give a pass to larger and growing losses as long as the user metrics are improving and accelerating. And so we have to be mindful of that, which means the company is bowing the seeds down for much better, bigger user growth and faster penetration, and that's what they care for from an investment standpoint. And I hope that's the case with remains the case with Bilibili. Okay. Now looking at the technicals on the chart, you have your chart and I have my chart. So going back to this, one last look at this technical chart. This to me right here where the stock is right now, with at the lower end of the channel support, seems like a buy to me, with easy run all the way up to 55 and hard stops below, let's say, yesterday's low of about $43 per share. Would you agree?
Completely agree. Tight stop, and with given the current market conditions. So if it breaks past that stop, we're out, and then we'll look for a opportunity to get in lower.
Yeah, sounds good. All right, folks, this will conclude it over here. Great presentation as usual, and I hope everybody learned something about this company. So watch the user metric growth. We need to see continuous strong growth. We'll look at all these deals company is signing with partnerships with major championship games and esports and major deals they signed in Japan and such. These are the drivers for growth, and the chart is crazy strong. And Jaguar Scan has been showing us exceptionally strong bullish accumulation in this name for quite some time. That's it from us. We'll see you next time. Thank you.